So thank you
Okay.
all for being here tonight for our artist summer workshop series for artists. Tonight, we're going to talk about everyone's favorite subject, accounting. I know it's my favorite subject in school. Debbie Banks, a CPA, is here to lead us this evening. Debbie is the Chief Financial Officer at Ocozzio, Inc. and the Director of Ocozzio Advisors. Ocozzio Advisors is the accounting firm that does the books for the Greater Augusta Arts Council, and Debbie guided us through the PPP application, the tracking, and pretty soon, I guess, our final report, and also helped us go totally online, virtual, in the cloud during the pandemic. So I thank you very much, Debbie, for that. And I know you have a PowerPoint to share with us, and I'm going to turn this over to you. Thank you.
Okay, good evening, everyone. I've got some good information to share with you. I shared with Brenda before I started. I tried to talk with an artist or two and get some information about what you'd really be interested in, because I want to gear this to you. You know, you're not interested in all the details and all the crazy tax stuff. So try to gear it towards you. And at the end of the presentation, I'll provide my contact information. If you have any questions, I'm glad to answer those via phone, or you can email me. Often it's better to talk with someone one-on-one about their specific situation, or I can do, you know, answer accounting or tax questions. But with that, I think I'll answer a lot. I've noticed we got some questions early, and most of them are covered in the presentation that I'm giving. But again, contact me if you have any others. And with that, I'm going to share my screen. Okay, can you guys see my screen?
Yes. Yes.
Okay, great. All right. Again, this is geared specifically for artists. So first thing I kind of wanted to talk about is that as an artist, whether you realize it or not, you are a business. If you are operating to make a profit and cover business expenses, your daily costs, then you are actually running a business. So what do you want to make sure that you are covering when you start this business? You have to make sure you're covering your materials and supplies and overhead, which is all types of other things like your rent for the space you're in, any salaries, anything other than the direct cost of the art that you are producing in whatever form that may be. You'll have power bills and things like that. You'll also need to consider how you're going to mark up and how you're going to price your products. So something to consider there is that you've got to think about the value of your work. So often, as I kind of was doing some research, artists don't know how to price their work. And that results in overpricing or even underpricing, both of which can result in missed opportunities. Overpriced, it's going to be difficult to sell those products. Undervalue it, and you're losing out on some revenues there. I also, I work for Ocozzio, which is also a marketing company, so I know the value of marketing and what that can do to bring in your customers and the types of networking and building relationships that are necessary. And even, you know, in our online world, in our digital world, a lot of that has changed, but the very basics in building those relationships are so important to any type of business. All businesses have to keep records. You have to keep track at a very basic level of money going in and money going out. You have to be able to keep track of your products and your work. You have to monitor the progress of your business. Am I making money? Am I losing money? Are my sales going up? Are my costs going up? Those are things that you should consider through your accounting system for monitoring and trending your business and how your different lines of businesses may be going. And then on top of that, tax returns have to be prepared and substantiated. Now, most people, if you go to a CPA firm and to get your taxes done, of course, their main concern is going to be getting an accounting system and pulling numbers together in order for that to meet that compliance requirement to prepare your tax returns. That's not the main reason to have an accounting system. I want you to be able to track your business and make business decisions as opposed to just filling out a tax return. Business versus personal. Now, this is a big question for any type of business, but I can see how it would be even more important in the day-to-day life of an artist. The IRS does not let you take deductions for any personal or family expenses, and they very much frown upon intermingling your personal finances with your business finances. For that reason, it is best to open a separate account for your business activity. Another byproduct of that is that it allows your business to build credit on its own, separate from you, which is another good reason to, if you are able to apply for a business credit card, that's even better. You know, you have your bank account and your business credit card, which you can make those day-to-day purchases on, pay off every month if you're able, which may allow you to get some type of rewards, but it's also building business credit. And that could be important down the line as you maybe seek to grow your business and are in need of capital. Also, business cash flow is more apparent with separate account. You can see, you know, if you're looking at your personal checking account, you can see what's going in and out. If you've got business stuff kind of intermingled in there, it's hard to pull out those separate items. Much better to have a separate account. It's just much cleaner. One thing one artist that I spoke with asked me and said, well, what happens if you do put your business and personal together? It could expose you to IRS penalties and other complications, you know, because it's not easily segregated out, and they're going to want proof of every type of expense and segregating out what's business versus what's personal. And another important thing actually for that is that you've probably heard, if you're ever audited, you don't want to provide more information than what they're asking for. So if you have your business segregated out into a separate account, you would just need to provide information on that one bank account. If you have them mingled together, then you're going to be providing all of your banking information, personal, business, whatever. Don't know what they're going to do with that information, but you never know. It could trigger something else. So let's be careful and just give them what they ask for. Keep your business segregated. Another thing, too, is that if you have intermingled your personal and business dollars, if your business does close and you have outstanding debt, the creditors could potentially go after your personal funds. We don't want that to happen, so let's keep them segregated. So now we're going to look more specifically at accounting. So what is accounting? Accounting is whatever system that you choose to record your transactions, which is your day-to-day ins and outs of cash, and the system will help you summarize and compile that information into a reporting mechanism where you can get a summary of how your business is doing, where your cash is going, and how you're doing as far as generating revenues and selling your products. You'll see accounting is required for a couple of different reasons, which I've alluded to. You have compliance purposes. That's government agency reasons, such as preparing and filing sales tax returns, which you may be responsible for, preparing and filing income tax returns on profits from your business. And again, you have to be able to support all of those items on your tax returns. Even though the IRS doesn't audit you every year, you still are responsible for being able to substantiate every number on that return. And that's important to remember. The main reason, though, like I said earlier, is for business management purposes. You want to be able to pull meaningful reports from your accounting system to help you monitor the progress of your business and look for areas of improvement. Otherwise, you're just making business decisions on the fly without any good data backing that up. And that can get you into some trouble, at some point down the road. So it's important to know at any given moment where you stand and which direction your business is going in. And your accounting system is what's going to help you pull that together. First, I'm going to go over a couple of basic financial statements. And the first one is the balance sheet. And this is easily pulled out of any accounting system, and we'll talk about some different systems in just a moment. But the balance sheet, it lays out 3 different sections: your assets, your liabilities, and your equity. This is something the bank would be interested in. Oftentimes, business owners that I speak with just, think they just want to toss this one and get to the income statement. But this is important too. It is a snapshot at any given moment in time. Your assets are going to be everything that you own. Your liabilities are things that you owe to others. And the owner's equity section is basically your ownership in the business. If you took your assets, everything you own, and you subtracted out everything you owe to other people, what's left over is your ownership value in the business on a very basic level. So assets are going to be things that you're really familiar with, such as your cash in your bank accounts, any equipment, furniture, fixtures, anything like that you own. If you have inventory, which you may as an artist, that would be an asset. Liabilities would be your credit card debt, any bills that you owe to, your utility company, this example shows wages owed. If you've got employees that have done work for you and you haven't paid them yet, you owe them that money. And then again, owner's equity is what's left over at the end after you've subtracted from your assets everything that you owe to others. The income statement is probably more familiar to you. It's basically your P&L is another word for it, is your profit and loss statement. And what it does is it shows, instead of for a snapshot in time like a balance sheet does, it shows for a period of time what were your revenues coming in, what were all your expenses going out, and therefore what is your net income or your profit for that period. This particular one shows for a year ended December 31st, 2019. And what it tells me is that $2 million in revenues came in during that year. Of that $2,700,000 was directly related to the products that I sold, as far as the materials that went into them and direct labor that went into them. And then you can see the other type of expenses that were recorded against this business. And there are various categories: advertising, sales, salaries and wages, supplies, travel. You can have meals that are tax deductible up to 50%. Just many things you just have to discuss with your accountant what types of categories that you want to track those things in. These things also directly translate to your tax return, and your profit, this $100,000, is what you are going to be paying, basically paying taxes on, depending on what type of entity you are, and that's a whole other discussion, with some exceptions that you may have heard people talking about book tax differences or differences with your tax returns. And all that means is that on your tax returns, some of these things might be handled a little bit differently than they are on your books. And one of those examples is what I just mentioned, the meals. On here, if we had spent $1,000 on meals here under expenses, it would say meals, $1,000 in expense, but on your tax return, you could only take 50% of that. So that'd be $500. And so therefore you'd get a different answer down here at the bottom for your taxes. So just know there are some things, this is an income statement which will translate to your tax return, but there are a few things that are a little bit different on your tax return as far as how they are handled for deductibility. Accounting systems, this is whatever method you use to keep track of your daily ins and outs of money, any type of financial transactions. Those transactions can be your sales, which can be done on invoices or sales receipts, any money you spend from the bank account, bills that you receive, and as well as any money that you spend personally out of your pocket on business costs, which we do need to get recorded into the accounting system. There are manual systems like the shoebox. I've seen that. I used to work at a CPA firm and worked there for about 9 years, and we literally had people that brought in receipts in shoeboxes. Some people try to handle it themselves in Excel. I think this can get overwhelming as you start to grow and your transactions get a little more complicated. We highly recommend QuickBooks and QuickBooks Online. There are some others like Xero, FreshBooks. These are cloud solutions, but there are also desktop solutions such as QuickBooks Desktop, and difference being that the cloud solutions like QuickBooks Online are hosted on a server somewhere else, and you can access them anywhere, anytime, as opposed to a desktop solution, which means that the software is installed literally on your computer that is sitting in front of you. So you would need to be at that computer working on that software as opposed to being able to access it from somewhere else. But there are many different types of accounting systems, and QuickBooks, which we typically recommend, is just one of them. We talked about these reports, the balance sheet and the income statement. And behind the scenes on those two reports is a chart of accounts. And those are some of the things I mentioned to you, like the revenue accounts and the expense accounts, the asset and liability accounts on the balance sheet. It's the foundation of your accounting system. It's the backbone. It's going to be a way for you to categorize every transaction, and based on the way it's categorized, it knows which report to go to and where to show up on that report to give you useful information. Again, I mentioned QBO, QuickBooks Online. It's a simple software, and it's designed for small businesses. It is designed for, just like QuickBooks Desktop, it's really designed for the non-accountant. Instead of having to go in and fill in debits and credits, you're able to go in and fill in a form that looks like an invoice and fill out a form that looks like a deposit slip. And behind the scenes, it's doing the accounting for you. So we find that it's a much simpler way to jump into accounting is with a package like QuickBooks Online. There are also some other advantages other than the simplicity. The security. I mentioned that QuickBooks Online is one of those that's hosted in the cloud. It's hosted on a server that is maintained by Intuit, the company that built QBO, and they have very stringent security protocols. So you can be assured that your information, when you're putting it in QuickBooks Online on their server in the cloud, is very safe, as opposed to information that you may record in your local software sitting on your desktop computer in your office. That would be a little easier to hack into than one of these with this high level security. Again, the cloud options are accessible anywhere, anytime that you have an internet connection, and can be accessed from both, for instance, Macs and PCs. As a accounting person, I tend to use PCs and Windows type of devices, whereas my marketing people over here use Macs and everything Apple, but we could all access the same QBO file from those different things in the cloud. There are some bolt-on products for QBO that do all types of different, that's the ecosystem of apps with seamless integration that do different, more specialized activities such as construction. We work with a construction company, and they have a bolt-on to QBO to make it more usable for that particular industry as far as tracking jobs and that kind of thing. So that is another just a vast myriad of things that are available to work along with QuickBooks Online, as far as being able to pull in transactions kind of in an automated fashion. QBO is able to also talk with most banks that I am aware of. I haven't come across one yet that it doesn't work with, but you can integrate it with your bank into your accounts where it pulls that information over every night or whenever you kind of push the button, and then you are able to categorize those things as they come across and pull those straight over without having to do the data entry. This is just a quick look at the main screen of QBO, just so you can see it's kind of a simplistic, view, not real complicated. You've got a menu down this side where most of the things that you would use to record expenses or sales, to pull reports, to do sales tax or get other type of tax information. And you can run your payroll from here as well. Or you can, hit from this shortcuts menu in the middle, where if you wanted to add an invoice or take in a payment from a customer, you just click right there and it takes you right to where you need to go. Also can see your bank account balances right there just at a glance, which is pretty helpful as well. In this case, I wanted to show you how an expense is recorded. And this happens to be a registration fee for Arts in the Heart, and we're going to pay it to the Greater Augusta Arts Council. You see, we're just filling out a form. It's going to come from the checking account, so we pick the correct checking account, the payment date, and then we're going to enter the check number. And you see this boxed in section that says category. This is the expense account that we're going to put this particular payment to, so that it'll go through to the correct place on our income statement. At the other far end, you see something called a class. You don't have to use classes, but I find it very useful in different ways for different businesses. In this particular case, I was thinking maybe an artist would be interested in keeping up with the various venues or types of selling opportunities that they have. And what this does, and I'll show you in just a second, allows you to run reports that will show you transactions, not only for what type of expense it is, but what type of class or what type of opportunity, what type of venue, that it was sold. In another example of that would be that I've worked with physicians' offices, and they may have 4 physicians that work together. And so if we wanted to be able to categorize direct expenses for each physician, you could have a class called, Dr. Brown and a class called Dr. Oliver or whatever, and each one would have their own class where we could also tag the expense, or different departments and that kind of thing. Here's what that does for you. Because we recorded expenses to not only the expense category that you see down the left, across the top is what is called a class in QuickBooks, but you're able to see maybe how much you brought in and spent directly related to art sales or fairs, or what's on consignment, what you sold in the studio or online. So you'd be able to split that up, and this is the information that I'm talking about. This is not something you're doing just for a tax return. This is something that you're looking at to figure out, well, maybe I need to bump it up on the art fairs. I seem to have a good, net income to my revenue kind of perspective there. So maybe I need to do some more of those, or look at it and go, the in-studio sales are kind of low this month. What do I need to do to bump those up? Do I need to do some more marketing, or, have some pushes on Facebook, or, you can kind of look at it overall. Also look at your overhead costs and decide, here's rent for the studio, since you're not really tying that directly to any particular one of these classes, it can be considered overhead. And then I've got a little bit of travel that I showed in overhead, just to show that, you could have gone to somewhere to pick up art supplies, not for any particular art fair, but maybe just in general to keep stocked in your studio. So this is useful information, I think, to help you discern where you may need to, apply more attention, or what you could do to maybe bump up some of your sales. Just some additional insight. Another thing that QBO has is a mobile app, and it's very user-friendly. When you're on the road, you could actually pull up a customer's account balance. You can shoot off invoices. But another very useful thing that it does is takes pictures, captures receipts that you may have if you're at Walmart, or if you're at a meal with a potential customer. After you finish that meal, you can just snap a picture directly in the QBO mobile app on your phone and capture that receipt, and then it pulls straight into the software. And you see it's kind of small over there, but it'll pull a picture of the receipt, the date, and you can provide a description, the dollar amount, and then you can go ahead and actually categorize it right there on the spot instead of having to worry about that a little bit later. So that's a very useful feature of QBO, and it's built in. Now there are some, if you don't use QBO, there are some other receipt capture apps that are like outside of the software that you can always use as well, but this is a particularly good feature of QBO. This seems to be a big question. What if I use my own personal cash for business expense? And this is, it can be cash, it can be your personal credit card, it can be on a check. And all businesses across the board, not just artists, this is typically an area where the accounting system is lacking, as far as these transactions are usually missing. So what does that mean? In the end, if I pulled, like this guy here, I pull $100 out and buy some art supplies, what does that mean? Well, you're underreporting your expenses, for one thing, meaning you're going to be paying taxes on more of a bottom line than you should be. You want to make sure to record all of your expenses, most notably perhaps for tax purposes, but also to be able to take a look at your business as a whole, like we just did on that last income statement, to see how much you're spending in total. Since you didn't pull that money out of the business account, what happens is it gets recorded as an expense, and then you get basically credit for putting that money into the business. It'll go straight to that owner's equity section where I was on the balance sheet, where I mentioned that's basically the value of the company. So it'll add to the value of your company by you putting that money in, and you get to record the expense and take it off on your taxes. Also, I did make this, write this caveat down here. It's discouraged to kind of intermingle business and personal, as we mentioned before, but there are times when it's just necessary. You've got the cash on hand and you don't want to write a check for something, or you don't have the business checks with you. So it's going to happen from time to time. Just keep good records.
Is there something else I can help with?
Okay, Siri thinks I'm talking to her. This other,
I'm not sure I understand.
Another important thing another important function of an accounting system is to be able to reconcile your bank and credit card accounts, as well as loan accounts. But a reconciliation, and you may do this on your personal checking account, is where you compare the bank statement that you get every month to what you actually have recorded, so you ensure that what you have recorded in your books or on your register is exactly what the bank has on their records. And this does a couple of things. It ensures accuracy and completeness. Also, you know, I've caught where the bank, they're not perfect, they make mistakes too. So you want to, just to make sure that checks that you wrote clear for the amount that you know, you think they should, and to the right people, and make sure that your accounts are always in line with what the bank says your account balances are. So that's another thing that's handled within your accounting system. And in this particular screenshot, you see I've got, you know, you up in the top right, you're comparing that ending balance. You've got the beginning balance, all the activity on the statement, your ending balance. You want to compare that to the shot below is actually from QBO. It'll have the beginning balance and the ending balance, and you just go in and check off that activity and make sure everything matches and that your balance is the same as the bank. I also wanted to make sure you're aware that if you want to take a look at QBO, you can jump in. There's a sample company available, and you don't have to worry about messing anything up. This is a demo system, and you go to this link here that I have on the test drive link, and you can go in and just put transactions in to your heart's desire, and it doesn't save anything. So that's just a good practice place if you want to give QBO a try. Next, we're kind of out of just the accounting and the accounting system and looking more at the compliance side of it. With taxes, you've got sales tax and income tax. This particular slide, I talked kind of about the Georgia Department of Revenue. So what you've got to understand is you may be required to remit sales tax in various different locations other than just Georgia. But speaking first from the Georgia perspective, when you first start a business and you apply for all of your licenses and everything, the state will let you know what your filing frequency is for sales tax. Kind of the more that you start owing, you'll have to go monthly. If it becomes less, they'll move it to quarterly or even annually. But sales tax returns and the remittances are due on the 20th of the month following the end of your sales tax period. So for instance, if you pay monthly and you're looking at the month of September, the return and the remittance will be due October 20th. Georgia has an online system called the Georgia Tax Center, and you will have to be able to identify, and this is another reason to have a good accounting system, your sales source to the state of Georgia, what sales may be exempt, and then the sales taxes that you have collected. So what is taxable for sales tax? Georgia imposes tax on the retail sales price of tangible personal property. That is a very complicated way of saying anything that you have made and can touch, like sculpture, paintings, jewelry, and crafts, and on some services. Most services are exempt from sales tax, but then I put in there what Georgia will tax as far as services, in-state transportation, admissions, and that kind of thing. Additionally, Georgia imposes tax on charges for things that you sell that are necessarily to complete the sale of that taxable property, like your painting, such as delivery fees. So that service of delivering the product is part of the sale. If it's necessary to complete the sale, then you will have to collect tax on that as well. End users are, okay, just in general, for sales tax purposes, keep in mind that it's the end user that is responsible for paying sales tax. So if you sell something wholesale to another retail outlet and then they turn around and sell it, the retailer is responsible for collecting and remitting the tax from the end customer. So whoever ends up with it at the very bottom of the chain has to pay the sales tax, and whoever sold it to them is responsible for collecting it and remitting it to the government. You may have heard this word Nexus. You have to charge and pay sales tax in states where you have sales tax nexus. Nexus just means a place that you are tied to, and how they define that is that you have a significant presence in that state. So if you work mostly from your home or from your studio, you might only have Nexus in your state, in Georgia, or I know some of you probably live in South Carolina. But certain things that you do can cause you to have Nexus in other locations. And so if you are going to for instance, an art fair in another state, it's your responsibility to check the rules in that other state that you may potentially have Nexus in. And some things to think about that may create a tie or connection for you to that state, or having a location or even just a warehouse in that state. If you have a salesperson or an employee or somebody doing an installation in another state, if you drop ship to another state, and obviously if you sell at an art show in another state, you very likely have Nexus, and it is your job to contact the Department of Revenue in that state. And you would likely have to register for some type of sales permit there in that state. Point of sale is a concept that helps you also in determining your Nexus. The point of sale is that time and place where a retail transaction takes place and is completed. So something is done, a sale is made in person, then the taxes are going to be collected where you are physically located, and that may be your studio. Again, craft fairs, every state is different. This is a temporary sales location, so some states provide kind of allowances for that. Some states provide special provisions for festival vendors. Others treat weekend vendors the same as in-state retail stores. And I gave a couple of examples. In Arkansas, out-of-state vendors collect sales tax and turn it into the festival organizer every day. And in Colorado, you have to register for a special event sales tax license. Another area, the tax on online sales has been kind of a controversy or a hot topic over the last, actually more than just several years. And if you do sell online, you are responsible for doing your research on that. A lot of the online shopping carts and marketplaces already have tax engines that will know how to collect the right amount, and there are certain, you might have an out based on the dollar amount that you sell in total online. But the key thing to take away from this is that if you have online sales, or you're stepping across a state border, however that may be, physically or by delivery or installation, you need to do your research in that state. And there's plenty of help online or with an accountant, with a CPA, to help you research and make sure you're doing the right thing so it doesn't come back to bite you in the end. The other part of your tax compliance is going to be your income tax, and that's what we were talking about when you're responsible for paying tax on your bottom line profit that's on that income statement, plus or minus any differences from your tax rules. This particular, what I've got shown here is your 1040, which is your personal tax return. But understand that depending on how you're organized, what type of entity you are, you may file a 1040 because everything's reported on your personal return, an 1120 if you're a C Corp, 1120S for an S Corp, or a 1065 for a partnership. So it all depends on how you're organized. The good news is that, you know, we've talked about the importance of an accounting system. You've obviously been recording everything and reconciling all your accounts all along, so you have everything you need to get your tax return done. You don't need to put a bunch of paper in a shoebox and bring it to anybody. You've got it done all right there. As a professional artist, you can take deductions against your income, any money that you brought in for sales, take all of those expenses and reductions to lower your taxable income, which will lower how much tax you owe. Keeping in mind, the IRS defines deductible business expenses as ordinary and necessary expenses, not lavish or extravagant, incurred directly in connection with your business. Again, keep the personal stuff out. Okay, this is very small words, but should I keep receipts? Yes. But it's important to recognize just because you kept a receipt does not mean that that expense is deductible. They still have to meet those requirements of not being lavish, being directly incurred in the transaction for your business. And I mentioned here that the most frequently lost deductions are for meals and travel, not always due to a lack of a receipt, but you have to be able to show that that expense was for business and not personal use. You know, meals have to be kind of documented that they were in some type of business conversation. You have to be able to show, you know, who was there, what did you talk about, what made it a business lunch. So in addition to the receipt, which shows the date, the time, and the place, it's helpful to note either in your accounting system or directly on the receipt the business purpose, the who was there, the business relationship, and any other information that you could think of that would help if you had to substantiate that to any agency. The IRS does not require you keep receipts, canceled checks, credit card slips, or other supporting documentation for meals, gifts, or travel expenses that cost less than $75. And this is something that people really, I get questions all the time. Well, if it's what amount, like under what amount do I not need a receipt? Simple answer, $75. However, you still have to document all the facts of that particular expense in case you are audited. Even if something was say a $50 meal, they're going to want to know who was there, what was the purpose of the meal, when was it. They're going to want to know all of those things. They're just not going to be necessarily interested in seeing the receipt because it was under $75. So something like that receipt capture that I mentioned for QBO can really help save your hide in case of an audit, or just to help keep up with all of that information. And I've listed there some other choices other than QBO: Expensify, Smart Receipts, Receipt Bank. These are other choices that are not built into an accounting system. They are separate. And I think somebody had asked me too, another question from an artist was, well, what if I don't have the proper documentation? Well, the answer to that is that the IRS comes in, you don't have the proper deductions, proper substantiation. So they say, whoop, that deduction is not allowed. And they will say you had, $50. Well, now you had subtracted that 50 to come down to your taxable income. Now they're going to disallow that deduction, and that 50 gets added back to your income, and you'll have to pay taxes on it. So what business deductions can I take? You can take anything, again, directly related to your business. Supplies, any kind of training or classes, continuing education that you take, licenses, dues, subscriptions to any like journals, particularly you may business journals or any related to your profession, any equipment that you have to purchase, and anything, these other things listed are kind of things that you would think of that you would need to run your business. You're going to need a phone. You're going to need a cell phone probably. You have insurance. You're going to have maybe an accountant or an attorney. You're going to want to get that marketing done. So internet typically is going to be deductible. And any fees that you pay for entering your festivals or juried art shows, anything like that, any of those fees, any expenses directly related to your business. Additionally, you have rent that you pay, business travel, meals, again, limited to 50% for tax purposes, and local travel, which can include anything that you're doing for business as far as going to purchase supplies, going to meet with your accountant, any of that, anything you're doing for business purposes, to scope out a gallery, anything like that, you keep up with your mileage. The rate for 2020 is 57.5 cents per mile, and you can deduct that off of your taxes. There's also an office in the home deduction, and that is if you don't have another location. If you operate your business solely from your house, you don't pay rent anywhere else, you can deduct a portion of those home expenses as your office in the home on your taxes. And how you determine the amount is by what percentage of your home is used completely dedicated to business. There's a simplified method and a traditional method. Often I see the simplified method used. They give you $5 per square foot for the office space up to a maximum of 300 square feet, which is $1,500. Or you determine the percentage of home use for business, then you apply that to all of your home expenses. Something else to think about is that if you use part of your home for storage, and not really in a traditional office sense, that counts also as your business usage if you're storing supplies or finished products or whatever it is for your business. If you use the traditional method and apply that percentage, say your office space accounts for 15% of your house, then you'll get to apply that 15% calculation to various home expenses, including these that I've listed here. Insurance, repairs, lawn care, mortgage interest, rent expense, utilities, all of those you can apply that 15% or whatever percentage of your home, your office is, to those home expenses, and that's deductible as your home office. Again, keeping in mind that if you have an office somewhere else, you can't take the home office. Quarterly estimated tax payments are going to be very helpful at tax time because particularly if you're not a W-2 employee, you're not having any taxes withheld regularly like you would from your paycheck. So if your business is profitable, you have to think about those taxes, and the IRS wants their money and they don't want to wait until tax time in April. In fact, you can get penalized for not paying in at kind of a regular interval like you do with a paycheck. So what you have to do is calculate, and this is for self-employed people who don't have a W-2, calculate what you think your taxes would be for federal purposes, self-employment taxes, which are your FICA, your Social Security, Medicare, that if you are a W-2 employee, you're going to be paying out of your paycheck, but you're not if you're not a W-2 employee, and your state income tax, and determine how much you think you're going to owe and kind of pay that throughout the year based on quarterly estimated tax payments. And you can easily get help from from your accountant to help you figure out if you're profitable, you know, how much it may be helpful to go ahead and pay in throughout the year to keep you out of trouble with the IRS. And that's the end of the accounting and tax information that I have for you tonight. But if you have any other questions, I've got my contact information up there. Like I mentioned before we started, often it's easier to talk with people specifically about their needs. I've got my direct number and my email, and I'm glad at any point, give me a call, and I'm glad to help you as best I can. So, Brenda, I will turn it back over to you.
Thank you, Debbie. This was so interesting. I learned something every time I watch a presentation like this, and I hope the attendees did. And we had some more people join us, so we do have a larger audience. I don't know if you were hearing the doorbell ring during the presentation. I do see we had a couple questions come through. You said you would take questions at the end. I know one question that came up across the screen was about local travel. Is there a mileage on that, or does that just mean when you run into the bank or run into the store? Is it like a 250 miles of your home type thing, or is that?
No, that's just, there's no minimum requirement. What you keep up with is your purely business travel. You can't count your commute. So if you do have an office somewhere else, driving from your home to your office is your commute. But if you take off from work and go to the bank and to see your accountant, or go to the, Lowe's or whatever, and it's all for work purposes, you keep up with your mileage on that trip, and you can deduct 57.5 cents for every mile that you drive for business purposes. Another thing that some will do in order, to get some money back in their pocket, is that you can reimburse yourself for that travel. And that's helpful as well.
Thank you. I will say that on the sales tax, that our state, Georgia, has gotten very aggressive in collecting sales tax from festivals in the past few years. And we were surprised 2 or 3 years ago to actually get correspondence from Department of Revenue, state of Georgia, asking us for a list of the fine arts and crafters. And so in the past, we've always handed out a sales tax form in the packet for our fine arts and crafters and our Global Village participants. And the state, and we never know what people do with that form. I mean, it may go in the round file, we're not sure. But the state does ask us for that list, and even some very small festivals, I've gotten calls from community events, and they've said, we just got a call asking for the list. What do you do? I said, you send it to them. So it's not, the state chasing, because they've lost so much revenue through online sales. And so the state is really chasing every penny they can. I saw that Dennis Scaly just put a question up. Let's see if we can get that. Does an artist need to make a certain dollar amount of profit per year to be taxed?
Well, anyone, if you are making less than the standard deduction, and the standard deductions have gone up quite a bit, as you know, since 2018. But if you are making less than that, then you're not going to be taxed on it.
It looks also as though we got a question from someone asking about categorizing kind of charity donations that it looks like might be related to the venue that they run or their business. It says, how do we categorize contributions given to a homeless person or the needy that solicits or asks to perform work? And this is coming from Studio Farmer, who just went off his video, but he was with us visually for a bit. And hi.
Hey.
And so this is urban agribusiness and marketing, so the culinary arts and whatnot. So you can unmute yourself and you can talk to Debbie yourself. I'm just saying your question out loud.
Okay, can you hear me? Can you guys
Hey,
hear
is
me?
this Dan?
Yes, it's Dan.
Hey,
Hello,
Dan.
how you doing? How you doing?
I've been helping Dan a little bit get his get up and running on QBO. So we've met, and what I would say as far as if you're getting a person to do some work, document it. If you're paying them in cash, this is particularly important. Document it, the date, what work they're doing, who you're paying it to. Typically, if you are paying someone who is not a corporation and you're going to end up paying them $600 or more for the year, you have to send them a 1099. So really the best thing to do, I know it's not always done, but what you're supposed to do is get them to complete a W-9. Hey, Dan, I see you now. get them to fill out a W-9 so that you have their information, their mailing address, their social security number, because the IRS has really increased their penalties for failure to send out 1099s. And so if you got audited and you ended up paying someone more than $600 and you didn't send a 1099, you could get stiff penalties. I mean, $500 or so for each one that you did not file. So what I would do if I'm paying someone to do some work, I would document it and try to get their information on a W-9, and so that at the end of the year you could send them a 1099 if it was more than $600, just to cover yourself. If you are talking about a charitable contribution, you can do that. Again, if you want to take something as a charitable contribution, though, it has to be a legitimate 501c3 organization. And so you would need to get that information as well. And when you record that charitable contribution, you have to note, who it was donated to, because that could be followed up on as well. But it's not a problem to pay a person to do some work at all. You can take that off on your taxes easily. Just try to get that information so we can send them a 1099. If it's somebody that's homeless or kind of down on their luck, that don't have a job, chances are, even if they get a 1099, they're not going to pay taxes on it if they're not making in a year more than the standard deduction.
These basically are individuals like they help watch the cars. Like the gas station in my neighborhood, there's a lot of people stand up at the gas station. Some pay for money, some don't for money, but most people are asking work for. So if I'm there and I'm getting gas, I might go to the ATM. That's like the gas station. Hey, I got a $12 bill or something. And there's two people, they just split the money or whatever. So and they do that often. Very often at the gas station that I visit.
I hate to tell you this, but I'm having trouble hearing what you're saying. Is anybody else?
Yeah, so I think, I think what you're asking is, if you basically cash out someone who's just wanting to do day labor for you, can you deduct that as a charitable donation? Which I'm not going to answer the question, but I'll let Debbie. But what Debbie is saying is, since we don't have crystal balls and we don't know if we're going to hire someone more than once, and you might think I'm going to pay you today $50 cash to do something, and it turns out that you pay them $50 a week for enough weeks to 12 weeks, and all of a sudden you've cashed them $600. Doing these little day labor things, you really should get them to fill in the form, which they're not going to want to do, so that you issue the tax form to them at the end of the year, and then you're tracking these payments. Now, if the guy is, on his way to Mexico and he stops in Augusta for a night and you hire him, that's just a $50 job. But it doesn't sound like you're asking if that's a charitable donation, but it's not, because he's not a charity, he's a guy.
Right, and I can guarantee you it is much easier to get that W-9 information from somebody before you pay them than it is to get it afterwards. So do that up front. Yeah, I can pay you $50 or I can pay you $100 to help out today, but I really need you to fill out this form. Blame it on your accountant.
And you can print that form. That's available on the internet. You can just print that form and have them handy. Like, you can have them in your glove box, if you need them. So it's not a difficult thing. What's going to be hard is getting someone to sign it, honestly.
Yeah. Well, especially dealing with homeless people that's chemical dependencies and things they down and out. But that's what they usually asking for money. And instead of just giving people money, now more people they want to do work, like wash your car, something like that, or like if I'm doing yard, because I do a lot of yard work and things of the nature in the neighborhood, in the community, and I have 2 or 3 guys come and just from the same corner, from the same store, and wants to do some light work with me or whatever, and I might give them like $5, $10 or something like that. Could add up $40, $60 a week, really, based off of these individuals that ask for the money, but they'll do the work. And my thing about, I'm usually pulling it out the ATM right there at the spot of the gas station where I might be paying the people in.
Yeah. I don't know,
That's
Debbie,
one
if
of
you've
the-
got that, but
that's one of the
I think
reasons-
we're.
Yeah, I don't
you're-
know why it's breaking up so badly. I can't really
so
hear,
You're
but
kind of,
Dan,
yeah, it sounds like
you and I can,
question.
if you want to talk more about this, we can talk about it tomorrow.
Okay.
I've been pretty unavailable today. It's been a crazy day. But maybe we can talk about your specifics more a bit offline because I'm glad to help.
Right,
Thank
and there
you.
was a request for you, Debbie, to go back to the, what is a deductible slide and what is the home deduction slide?
Okay.
And
And what
then,
I can do
and then we want to
too
remind
is-
everyone that we'll post this as soon as we get it edited,
Yeah.
so people will be able to go back and look at it.
Okay, so let me see if I can get back to it. But yeah, I will provide these and let's see if I can get back to it. Let's see, what is deductible?
Wesley, is that right? Is that what you wanted?
Am I
Yes,
not screen sharing anymore?
you are.
Looks like it just disappeared.
Here you go. Okay, that's business deductions.
Is
I
it
think
up there?
That's it. So that's
Because
the
I
one
can't
that,
see anything.
all right, so that's the first one that Wesley wanted. What business deductions can I take? That's great. And then Dennis Skelly asked for the home studio or the home office information. So we'll let Wesley tell us when he's done. I don't know if he's taking a screenshot or what.
Yeah, and if are there questions about it, I'll be glad to. There's 2 pages of the business deductions. So there's these, where's my mouse? And here's some more. And this is where I kind of expanded on the local travel information. And you have the mileage rate right there for 2020.
And then it looked as though Dennis Skelly was requesting to see again the information on the simplified versus traditional method for the home deduction.
Okay, so that's up. And I had a question about that. What if you charge, if the artist is incorporated, can you just charge them rent? Can you charge yourself rent, basically?
You can. But if you do that, you got to keep in mind that you've got rent income to report as well.
Oh, good Lord. And that would be on your personal taxes.
That would be on your personal or whatever type of entity you had organized your rental business as. But, the good thing about that, too, is that if you're charging yourself rent, you've got rental income, but you can offset it with expenses. So you may be able to, take some expenses for things, such as these things we mentioned here in this home expenses slide. There's some things that you could take off against that rental income that you normally wouldn't be able to take off on your personal income tax return.
Okay, and then while we're talking about all this, another follow-up question was, how do you change some of this stuff from personal to business if you're using the same name for both? I guess if you're using your name for personal and business.
If you're using your name for personal and business, you're operating basically as a sole proprietor, and you can do that. What I would recommend is considering setting up an LLC. You can be a single member LLC, but getting a separate EIN for your business is typically helpful to kind of put that layer of division between you and your business, so that if something potentially happens, that you may not be liable personally for some of those liabilities or debts or judgments or whatever happens. It's a good idea to kind of separate yourself if you can. But there are people that operate as sole proprietors, and report on the Schedule C on their tax return. at the point, if you do end up hiring anyone, as far as having an employee, then you would have to get an EIN and a kind of a business, separate business entity. But I would still, you can operate as a sole proprietor, kind of an easy thing to do, but as far as not requiring any kind of paperwork or anything, but it just gives you the extra assurances that if something did happen and a business went under for whatever reason, that you may not be personally responsible for some of the fallout for that.
And I'm just going to plug it real quick. I know Brenda's having the same thought, that we actually had a webinar about how to create an LLC, what are the reasons for it, what are the different ways to incorporate, that Lee Little gave, and that recording is up on our website, and it's really informative. So this webinar with Debbie and the webinar with Lee Little, they really tie into each other well. So these kinds of questions, if you haven't seen Lee Little's, you really should watch it.
Yes. So I want to again, oh, here we go. One more question. If multiple artists live together, oh, come on. Was that a joke? If multiple artists live together, can they claim more on home expenses? Yes, they all take, someone's got the bathroom. So I just want to thank everyone for attending tonight. This is the last of our schedule summer workshop series for artists. We have a couple ideas continuing. We plan on doing a series. It won't be a single night on setting up an e-commerce website. So stay tuned for that. But we're also interested from those of you who are attending what ideas you have or what you'd like to know. And so please make sure that you email me or Pax or admin at augustaarts.com, because we are very interested in knowing your thoughts and what you'd like to learn. You know, we don't teach art classes, but we teach you how to be a business in what you're doing. And remember that Debbie has offered to take calls if you want to have specific questions about your business. She'll take a phone call from you and happily answer your questions or an email. And Debbie is very helpful and actually speaks easy to understand English when she's talking her favorite topic of accounting.